Okay, we are live with Dylan LeClair. And Dylan, I am pumped to do this. I was just mentioning that my son is at university. He's going to be sharing this podcast with a bunch of his buddies. I need to understand your story. I know a bit of it, and you've shared it, and maybe you're even tired of sharing it, but it's a story that maps directly to your life, your terms, and what we talk about. But can you tell everybody what you're doing now and what the last maybe 18 months or so has been? And then we'll dive into like monetary policy and the whole Bitcoin game and all of that stuff.
Yeah. So thanks for having me. First off, I really love doing these podcasts and just kind of, talking my book a little bit, but, really just more like speaking the truth about Bitcoin is what really inspires me. So I guess a little background on myself. Currently I work at Bitcoin Magazine. I'm the director of financial market research. And so we put together basically a daily newsletter about global macro derivatives around Bitcoin and on-chain analytics, and kind of like, mesh all of those three things together and try to give a picture of what's happening. And, for the most part, you can just stack and hodl, but, a lot of people kind of want to see what's happening under the hood. So that's what we do. And that's what I'm kind of focused on day to day. As far as as how I got here, 18 months ago, 24 months ago, I was attending university. I was attending business school at the University of Vermont, my hometown state. I loved school. I mean, it was awesome. Studying Keynesian economics. I was kind of a numbers guy, always have been. And so I just kind of figured business, finance was the route I wanted to go. And as I kind of was learning, quote unquote, in school, I found myself like spending less time on homework and my lectures and the assignments that I was, given, and more time on Twitter, listening to podcasts, and just reading on my own terms. And so, that kind of trend continued on throughout the first semester and into the second. And then in March of 2020, COVID happened. They sent everyone home, and it was really clear just the contrast, the value proposition between, college, university, completely on Zoom, taught by mostly boomers, and what I kind of came to understand was a completely outdated curriculum. And a lot of the things were just, I identified as straight up wrong, in terms of like the economic sense about how they define inflation, or just a lot of these things that seemed very archaic, and from first principles just didn't add up. And so, and at the same time, like I stumbled upon Bitcoin around 2018, 2019. Like, again, I was 17, 18 at the time. So it wasn't like, I didn't dive too far down. But the more I just started learning on the side. I had a Twitter. I was just lurking. I continued to learn, and I listened to a lot of podcasts, like Press and Pitch, great podcast, just first principle stuff. I really started kind of fell down the rabbit hole, I would say. I mean, it's pretty cliche and a lot of people say that, but and that rabbit hole journey, I guess, was accelerated in March because of the economic environment, but also just because of how clear, my quote unquote education, what the value of that was compared to what I could just learn for free. And so around May to June, I just decided to drop out, not officially at that point, but my mind was made. And I decided to just drop out. I didn't have a plan. I didn't have a job lined up.
So we'll continue there, but how did you make that? So like, what was it about the comparison between what you were learning at university versus learning on podcasts that made you think the university was going to be not as valuable to your future? Because I think a lot of people are going through that thought process. I'm just curious, like, was it just a feeling you had, or was it something specific? The difference between what you were being taught by the boomer professors that you're saying versus what you were hearing on the podcast? Is there something specific, or was it just an overall feeling that this was the path?
Yeah. So, I mean, it was a couple of things. It was like, obviously the Zoom university thing, just didn't find it too valuable. And like, I was going in state and I got good grades. So I wasn't paying an arm and a leg, but it was still a solid sum of money. And at the same time, like when I say I fell down the rabbit hole for Bitcoin, I fell down the rabbit hole hard. I read the Bitcoin Standard, Price of Tomorrow, the Sovereign Individual, which I see behind you. And I kind of realized that the credentialism of the industrial age and kind of the past was really kind of crumbling, and that the internet was dematerializing all information, and that it really is not going to kind of matter where we're headed. So if I was an engineer or wanted to be, or a doctor or something else, well, it would probably be different. But I came to understand in March or April, my kind of thesis was the opportunity cost of everything was Bitcoin. We're at the end of this kind of long-term debt super cycle. The only way out of this is to print, and we can dig into that a little bit later if you want. But I realized that I wasn't just paying for my college in dollars, but I was also paying the opportunity cost was I couldn't be a productive member of society, working, and I couldn't be acquiring Bitcoin. So I dropped out and I literally just picked up a manual labor construction job with my family. And I put my head down, plugged in some AirPods, and worked 8 hours a day.
What did your family say at this point? They were on board with your decision?
They knew I was into Bitcoin, like really, I had made that clear, but they were uncertain for sure. I was like, hey, mom and dad, I know this sounds crazy, and you have this dream of me finishing school, but I'm dropping out because I'm going all in on Bitcoin, and I need to acquire as much as possible. And they definitely were very skeptical, but respected my decision. And so yeah, that's what I did. And I just lived at home, stacked a bunch, and I kind of parlayed that and like what I learned, through listening to 8 hours of podcast a day, eventually into a job at Bitcoin Magazine, just based off of Twitter. But that took 8 or 9 months. But
so anyone
that's the lowdown.
That's crazy. I love the story. Anyone listening to this who was wondering what podcast you were listening to, was it all Bitcoin podcasts? Was it any on like the economy, for anything come to mind? Because I'm just thinking there's going to be someone else out there your age right now who would want to go down a similar path. Was it just like all the main Bitcoin podcasts, and if they want to do the same thing you did, that's what to listen to?
Yeah, so I mean, it was for the most part like Bitcoin centric. So like Preston's pod covers Bitcoin, but it's also like macroeconomics and some more like broader trends. I also like with the Bitcoin Standard and like kind of Safedin's podcast. It's again Bitcoin centric, but really just like first principles Austrian econ type things, where completely like different, from the Keynesian school of thought. And my brain was, like, again, I was approaching this as an 18-year-old, and I had no biases. I had no a way of thinking already. Whereas, someone that's 55, right, and has been working on Wall Street for 20 years, well, it's different. But for me, I didn't have any preconceived notions of anything. And so it was pretty easy to just kind of, work around that. As other podcasts, I really like what Robert Breedlove does. He has a pod now, but just a lot of his writing and all of that, just, and Jeff Booth's book, he goes on a lot of podcasts, but The Price of Tomorrow really just, it barely mentions Bitcoin, but just in terms of what the internet's doing, what technology is doing to the cost of everything, pushing it down to zero. And at the same time, we have this monetary system that's pushing everything the other way. That was, those things all kind of together really just made the decision clear for me.
And then the connection to Bitcoin Magazine, were you sharing stuff like your opinions and thoughts and analysis on Twitter, and then it just naturally you connected with them? How did that connection happen?
Yeah, they one of the guys at Bitcoin Magazine, Christian Corollas, CK Snarks on Twitter, he reached out and he was like, hey man, I see you just chilling on Twitter a lot. Like I don't really know what role you have, but what are you good at? And I was like, listen, man, like, I don't really know, but I love Bitcoin. He's like, all right, well, you're hired. We'll figure it out. And so I started just doing media operations stuff like on a part-time basis. And I started writing a little bit. And those did really, really well. And so I kind of transitioned from just doing like media stuff on the backside of things to doing more financial market stuff. And then now I'm leading their premium market product on a daily basis. So
cool.
It's been kind of a wild ride.
Congrats, man. And I just want to say, as like, I'm about to turn 49, just looking at your age now, you're doing a big service for a lot of people. I really feel the work you're doing is probably some of the highest and most important type thing that any of us can be working on. So just know there's a bunch of fans out here. Yeah, keep doing what you're doing. Seriously, really, really excited. Okay, so let's dive into some of this stuff about like why Bitcoin. And I just did like some analysis on what you talk about on different podcasts and just on Twitter and stuff. You cover the gamut. Like right now, I have a lot of respect for Luke Roman. You're going back and forth with Luke on some comments on Bitcoin, which is like awesome. And they totally make you're speaking some good stuff, all the global negative yielding debt. So I don't even know where we want to take this, but I think I wanted to start with why do you like referring to it as the time chain instead of the blockchain? So maybe you can give everybody some context of what is that? I've only heard that coming up more recently from you and maybe a couple other times from some other people. What's the point here?
Yeah, so kind of when you're entering the so-called crypto space, you'll hear, especially for someone that's new, you'll hear the term blockchain, thrown out a lot, and more so in probably 2017 during this huge ICO boom. But the blockchain was this big buzzword that you could throw blockchain on some, very average product that hasn't even launched, and all of a sudden billions of dollars of venture capital is being thrown at you, and it's being hyped up as this world-changing thing. But most people, even in the crypto space, don't really understand the purpose of a so-called blockchain. And so what Satoshi did in 2009, when he released Bitcoin, was essentially he solved a problem that had existed in computer science for decades, which was it's called the Byzantine's generals problem, or the double spend problem. And essentially what it is everything in the digital realm can be copied. It's just all information, right? So everything in the internet is just information. It can all be copied. And so when you're talking about money, well, a problem arises, is that how do I send value to you? And how do you ensure that I didn't send that value to someone else? How did, that I didn't double spend that value? And so that problem was solved through a central, like a coordinator or a trusted third party. So you can think of that as a credit card company or a bank, or, think of just a central, kind of middleman, and there's, as the hub, and there's all these like spokes off of it. And so that was how that was solved, because again, there needs to be trust in the system. There was no decentralized way to do it. So what Satoshi did was with a blockchain, or with a time chain, he created a digital ledger, or I created in the sense that he released the source code and then people voluntarily adopted it. But what Bitcoin did was it solved for this trust problem with a time chain. So essentially there's this ledger, and it ticks every 10 minutes with a new block. And that's, and this is pretty deep here, but, I'll try to make it as simple as possible. But essentially, through just simple economic incentives alone, he allowed for value transfer to occur in a peer-to-peer way, in a way that linked the physical and digital realm in a way that no one can cheat. And so, there's a lot of things going here, but essentially what Bitcoin does, what blockchain does, it allows for basically value transfer and value storage in a decentralized peer-to-peer manner over the internet in an adversarial environment. And so that's essentially the problem Bitcoin solved. And in my opinion, that problem is a $300 trillion problem. It's, it fixes a lot of things. And it's why it's so valuable. But essentially, yeah, like Bitcoin wasn't just like the first iteration of digital money. It was tried many times before and failed because of this problem, this coordination problem, this problem of trust. And so what Bitcoin solved for with a time chain was this system of trust that nobody could solve beforehand.
Essentially, like just hearing you explain that, essentially the only reason that I'm using a bank today to send maybe you money in an old-fashioned way, here in Canada we have like Interact e-transfer, so you can kind of like email, kind of like a PayPal system. The only reason I'm using a bank is because if I send $100 to somebody, if the bank is recording that I've sent the $100, so that I don't send the same $100 to somewhere else. So people kind of like keep their money in the bank because, that's the trusted third party that you're referring to. And now with Bitcoin, I feel like I don't really need the bank. Like I don't need the bank to serve that purpose anymore. I don't need the ledger of my own records to be there for people to trust the payment that I'm about to make for them. I can use this entirely independent thing. And the beauty of that to me is like, every time I think about it, and this is where I think my brother thinks sometimes I just go crazy. Nick and I run this business together, by the way, Dylan. And I'm always like, this is the best invention ever. And he's like, what do you mean ever? I'm like, no, this is like, you don't understand. This is going to change the entire freaking world. Yeah, so like, I just don't need a bank. I can, we can use Bitcoin. I can send you value. You can send value back to me. It's recorded. It's pure. It can't be broken. So the entire banking system, when I went down the rabbit hole, I just thought the entire banking system is about to be eaten. Like you're probably too young to remember the early 2000s, but when MP3s came out, like I remember Napster. Have you heard about Napster?
Yeah.
What year were you born?
2001.
2001. Oh my God. So in like 1999, we were downloading songs. A buddy of mine was downloading MP3s off Napster, and we didn't realize that the format of MP3s was just going to completely upend the music industry. And I have that same feeling when I saw Bitcoin. I'm like, oh my gosh, Bitcoin is to finance what MP3s were to music. Like it's totally going to flip the whole thing upside down. So, okay, I want to get, I just want to get more of your views. Back to university for 1 second. Did any of your professors, like, did anyone there clue into this stuff, or were they in the Keynesian model and it was just like a textbook taught course? Was anyone considering this a new form of money, or no, not at that time?
I asked them about Austrian economics, and half of the, like my economics professors, and half of them didn't know what Austrian economics was. I asked them why they didn't offer it as a course, and the other half of them said, "No, we don't cover that." And so that was that. I did ask them about Bitcoin a lot. Like, I think everyone had heard about it, but for the most part, they remained blissfully ignorant at the worst, and at best, just very skeptical. And so I kind of realized, like, these so-called experts are just really kind of reading off a script, essentially, or are just regurgitating what they're reading in this textbook that's probably 20 or 30 years old. And so I did ask some computer science professors as well, and they just essentially gave me the blockchain spiel. And I was like, oh, well, they're also, these experts aren't really experts. And I realized, like, in this space, in this Bitcoin space and crypto, I guess more broadly, there are no experts in the sense that everybody's learning this on the fly. And so that was kind of a little bit what inspired me to be like, hey, well, I mean, I might be able to just make it off of merit alone and just be able to kind of be self-taught. And so yeah, that's, for the most part, they remain clueless.
Okay, so then when you went down this deep dive and you get into seeing all this global negative yielding debt, I don't know how much of it is around the world. I feel like, I don't know, what are we at with global negative yielding debt? I don't know at the moment, but I know it's a crap load. So when you see this and that it's ever expanding, what comes to mind for you when you see Bitcoin? Where is the end game here? How would you explain that to someone, or what are just the thoughts that come to mind when you see what's going on in the world right now?
Yeah, so off the top of my head, I think it's like $15 trillion of, 12 zeros, a millions is a trillion. So there's $15 trillion of contracts essentially guaranteed to lose money around the world, and Bitcoin's an $800 billion asset. So for context, and actually, if I could just rewind a little bit, when you were talking about intermediaries and banks and how Bitcoin is going to eat the banking system. So if you rewind it a little bit, why are banks needed, or why were banks needed in the first place, right? So what is money? And this is a deep rabbit hole, but gold is money. Gold has been money for millennia. And so there's basically two types of money. There's tokens, essentially like gold, seashells, a bare asset, something I can, if I'm next to you in person, I can hand this to you. And tokens, essentially the trust is that it's basically how hard it is to produce. And so gold won as money because relatively compared to everything else, silver, copper, any other sort of metal or a lot of other primitive monies, but because of other things like fungibility, durability, et cetera, they weren't really viable. So, but gold won out because it was relatively the hardest thing to produce. And so as society scaled, we were on a gold standard. But as the world became more globally interconnected, it's really, gold's very tough to transport. And if you want to trade fast, it's just inconvenient. So what happened? Well, ledgers built on top of gold came about. And so, that was kind of the first iteration. And what people realized was, hey, people deposit this gold into a vault and I give them the IOU and they don't come back for the gold much. And so I'm just going to hand out more IOUs. And that's what we know today as fractional reserve banking, because gold had the problem of not being gold is great at maintaining value across time, but it's very bad at transferring value across space. And so what banks did was with basically IOUs, or certificates of deposit, banknotes, was they solved for gold's basically lack of moving value across space. So it was basically, you can think of it as a technological solution for gold's failures as money. And so now, and that was 1700s, 1800s, 1900s. And with multiple bank busts and these huge credit contractions, gold was abandoned entirely. But government monies, this is something that's only existed for about 100 years. It's not something, fiat currency has been tried, but full fiat currency on a global scale has really only been the last 50 years. So this is really, it's an experiment, nevertheless. And so Bitcoin, you can think of it as it solves for gold's ability to transfer value across space, and for fiat's lack of ability to transfer value across time, by combining the digital bearer asset, the token, essentially, with, because I'm transferring value from here to here, with this incorruptible, immutable ledger. So that's kind of blending these two things together. That's the beauty of Bitcoin. And so I went on a little bit of a tangent there. So I sorry.
No. That I'm happy you went on that tangent. Bitcoin is better at what gold was doing. I mean, gold was a technology improvement in that it was better transferring value across space when there was no Bitcoin. Like you could put a bunch of gold in your pocket or take it on a train and go somewhere, and you could carry a lot of value with you, but it was open to the bank's ability to kind of centralize it and then kind of abuse the whole system. So like it was kind of good for, like, it did make an improvement, but then it had its limitations. And you're right, Bitcoin just kind of was better. I never really thought, the way you put it, I really like that Bitcoin's solving gold's salability across space. It's better at it than gold was, and fiat salability across time. So it's kind of crushing both of them at the same time. Do you understand how this hurts me? I've liked gold. I've been reading about gold for so long. That was the moment. My moment, by the way, was March 2020, when a bunch of people mentioned Bitcoin. I had dismissed Bitcoin. Like, I told people, listen, I run a business. I'm not going to take your Bitcoin. I have to pay taxes. You don't know what you're talking about. And then finally, March 2020, and I, read the Bitcoin standard, and it was all over. It was all over. I was like, how wrong? Oh my gosh, I've been so wrong. How could I be that wrong? So no, I'm glad you kind of went on that tangent. So then I have another question for you, since we're going down this path, is that there's so many other, I like to tell people Bitcoin is money, digital money to me, and all the other crypto space is technology or platforms. And I think of it that way. And I really try to make a big point of telling people about that. And when I look at some of these platforms, and listen, I own some Ethereum, and I bought it when I bought Bitcoin, didn't really know what I was doing. I'm like, oh, I guess I'll just like buy some of this stuff. Now, as I went down further into the rabbit hole, I understand the difference. And my view of Ethereum reminds me of software in the late 1990s, where client server software really got its start, where Microsoft could produce programs called Visual Basic. And all the developers jumped on Visual Basic. And there were so many Visual Basic developers because it was really easy to program in. And you could get these programs and they would install them on your computer. And there was a server in the back room, and the software was running on the computer. And it was called client server. But in the background, as the web was getting developed, I worked for a company called Oracle. And Larry Ellison of Oracle was saying, hey, that's the wrong architecture. That's completely the wrong architecture. The better architecture is the web architecture. And the web architecture will be a thin client up front, and we can do all the upgrades in the computer system in the background. Everybody will get the latest software. This client server software is not the way to go. But it was much harder to develop the web software because a lot of the protocols weren't coming out. A lot of the systems, the internet wasn't fast enough then. So client server really took off, and there was tons of developers. And then around 2004, 2005, 2006, the web architecture kind of caught up, and it just destroyed client server. So when I see this environment now, I can't help but have flashbacks to like, oh my gosh, Bitcoin with Lightning, now with Lightning taking off, Bitcoin is like the proper web architecture of money. And the fact that there's a lot of developers on some of these other platforms, including Ethereum, I'm not dismissing Ethereum. It is what it is. Like, I'm not trying to say, like it can serve a purpose. It's doing what it's doing. But it reminds me a lot of people jumping into one area, but then another architecture catches up. So when I see Lightning get released, and then, on Twitter, where I can send tips, can I send you a tip, by the way? Are you set up for tips?
I'm not yet.
Oh my gosh.
Twitter hasn't set it up.
Oh my gosh. We got to get you set up for tips. Yeah. So I've been set in Canada. We can't receive them here yet, but we can send them out. So I've been sending tips out. And when I see this happening, I'm like, this is the better architecture slowly creeping up. So is that how you see, do you see Bitcoin and Lightning as the money architecture very different than anything else? Can you talk about that a little bit?
Yeah. So I think on the most basic level, or maybe not basic, but what Bitcoin did was, so Bitcoin is money, but what Bitcoin did was essentially connected the physical realm with the digital realm for perfected value. And so what that means is with proof of work, with Bitcoin mining, the 21 million hard cap, this asymptotic supply issuance that's already predetermined, and the difficulty adjustment, where essentially basically supply is inelastic to demand. As the price increases and it gets more and more lucrative to mine Bitcoin, well, it gets incrementally that much harder to mine Bitcoin. It's essentially, you can think of it like gold, but as more and more people look for gold, well, it gets harder and harder to find. So I think of Bitcoin as a 0 to 1 invention of digital scarcity, and that everything else is this kind of 1 to n, or one, just something that's trying to compete for something different. So, a lot of people like to say Bitcoin and Ethereum, or, compare Bitcoin to XYZ coin and say, well, transactions per second or whatever. Well, that's completely the wrong framing, in my opinion. And here's why. Because Bitcoin is a monetary settlement network. What it does is just store and transfer value in the most efficient way the world has ever seen. It does one thing and one thing only on the base layer. That's store and transfer value. And so with a lot of these protocols like Ethereum, Ethereum has changed narratives a lot, and the base protocol has changed a lot. It's hard forked, and that's fine. There's nothing inherently wrong with that. But with that, the narrative has changed a lot of times. It went from during the ICO, Ethereum, never mind the 70% pre-mine, which basically a lot of these guys got into for free, whereas with Bitcoin, every single Bitcoin was mined with proof of work. So obviously it was a lot easier to mine Bitcoin on a laptop in 2010, but it was able for anyone in the world. There's open source software. There was no pre-mine there. But just going back to Ethereum, for example, with Ethereum, right, it's trying to do a lot of things on this base layer chain. And so whether that's NFTs or DeFi or ICOs or decentralized applications was a narrative. Ultimately, I honestly don't even like to compare them in the same they're not even in the same bucket in my eyes. Ethereum is more of like a computer science project, and that's fine, right? And a lot of people kind of get caught up because Bitcoin is this dominant apex predator of money, and it was the first cryptocurrency. When Bitcoin goes up 10%, the crypto market a lot of times will rise. As a rising tide lifts all boats. And when Bitcoin tanks, well, a lot of these alts tank a lot more. And so I think it's unfortunate that a lot of people log onto Coinbase, and when they should just be buying Bitcoin and saving value for themselves, and they go buy XRP, right? Because someone said, well, Ripple does more transactions per second, when the reality is XRP is this centralized token that Ripple Labs created billions of out of thin air, right? So there's a fundamental difference between these things. And yes, Bitcoin on the base layer won't scale for transactions for everyone on the planet, and that's completely fine. But you have second layer applications or protocols like Lightning, and even if it's centralized, in the sense that if you buy Bitcoin on Coinbase, that's a Bitcoin transaction, right? That is scaled on Coinbase's internal servers. And all that really matters here is that the base layer protocol, this money protocol for the world, is decentralized. You hear a lot of, in the crypto space, you'll hear decentralization thrown out, just like it means nothing. Like, oh yeah, we're decentralized, and it's coming from the marketing team that literally launched the token. So that's not decentralization. But what really matters for any sort of crypto protocol, and I think this is one of one, is that the base layer protocol is completely decentralized. It cannot be messed with. It cannot be changed. Anything on top of that, centralization on second, third, fourth layers, that's fine in my opinion. And so, I think Bitcoin versus crypto, build fast and break things. And there can be a lot of marginal improvements along the spectrum, right? You have Ethereum building smart contracts, and they're quasi decentralized. And then you have Solana or Binance Smart Chain that comes in and are more centralized, then they can do faster transactions or more smart contracts or whatever it is, right? And they're all kind of competing in this. I think it's sort of this kind of zero-sum game. And so, yeah, I just think they don't really compete.
It's so hard to get people to go down the what is money rabbit hole, because I feel like if you go down that rabbit hole, you ultimately conclude Bitcoin's the winner. But when you just talk about I find a lot of the conversation from the conversations I have is that people feel like they've missed the Bitcoin bandwagon. So they're like, oh, I'm going to buy some Ripple, not even knowing
bias is real.
Yeah. So, and I kind of just, I'm always trying to hand out copies of the Bitcoin Standard to anyone I meet, right? Like I'm buying a smoothie and I'm talking to the person that I'm buying the smoothie about the Bitcoin Standard. You got to read this book. So once you go down and understand what money is, you get it. Like once you go down that path, that's why I love what Robert Breed loves doing, the way you talk about things, because everyone's talking about what is money. And then we can layer on the platforms. And all these other things like Ethereum can be what it's going to be, and everything can be what it's going to be. But money is a kind of central to all of this stuff. Where do you think we're headed? I'm just kind of fascinated by your age, because I think the next 10 years is going to be super interesting. And there's a group of people your age. When I mentioned my son, some of his friends, when everyone's starting to they're all starting to understand this. When I was 20, we never had these conversations. Nobody was talking about inflation. Nobody was talking about global debt. Like this is a realization I had after going to university, getting a job, realizing I wasn't going to have the freedom I wanted, having to quit my job, get into real estate, start this business. And then Bitcoin comes out around and just upends like almost everything. So the next 10 years is fascinating. When you see a Senate candidate, I think one of your tweets recently was like, oh, just a potential Senate candidate in the US tweeting about Bitcoin. Where do you think we're headed? Like if you had to map out the next 10 years, how does this play out? Like with this much global debt, that you talked about, the trillions of global debt, where do you, and I know you don't have a crystal ball, but like play this out. Do we get more people in the US government that understand Bitcoin? Does the US government do we hit a hyperinflation point in the US or no? Is it like, how Jeff Booth talks about it, just kind of like, I think it's Jeff Booth, maybe it's Greg Foss, talking about just like one system kind of slowly dying out and Bitcoin being the life raft and just this other one taking over. How do you see the next 10 years playing out?
Yeah, I think so. Like for my age group, I guess like the Gen Z Zoomers, a lot of people are kind of slowly waking up, or they may not correctly identify the root cause of things, which I believe is the money's broken fundamentally. But a lot of people are fed up. They're upset, mad, angry, and a lot of it's like red team versus blue team. Like Donald Trump's evil, or like, oh, I hate Joe Biden, and it's like. And there's a lot of angst and a lot of anger.
Well, why do you, so sorry, I hate to interrupt when you're going like that. Why do you think there's the angst? Is it left, right, red, blue, or is the angst coming from somewhere else? Because it feels like a young age to have that kind of angst.
Yeah, I think in general, it's you kind of just see, especially towards the kind of end of these big debt cycles, you have wealth inequality at all-time highs or at extreme levels. And it's really more of a haves versus have-nots game. But that it manifests itself, and whether this is enticed by the media or not, I'm not sure, and I don't really want to go down that. But it turns, instead of haves versus have-nots, it's left versus right, black versus white. It's pitting people against each other when in reality it's not that at all. It's that there's a class of people that are benefiting systematically from the debasement of the currency. And so, essentially like the money is the baseline of all economic coordination. And so, when you work hard your entire life and you're just running on a treadmill and you're still at zero, versus when you look across the street and you see, millionaires, billionaires, et cetera, right? Like people are like, F Jeff Bezos. It's like, well, why? You order from Amazon 8 times a day. And so like, I think in general, like the kind of the populism we're seeing, increasingly so, just the divisiveness. And like, again, this isn't the US, it's global. So like, you have to think, why is this occurring? And my kind of thesis is that we're at the end of this long-term debt cycle. And so essentially like, we have Bretton Woods in 1944, after World War II, everyone agrees, all right, we're going to use the dollar for global trade. The dollar's linked to gold. Well, the US essentially kind of cheats. They run deficits. They don't really have the gold to back it. In 1971, that gold link is broken, and all of a sudden, the whole world is using fiat currencies. Fiat meaning just backed by the full faith and credit. It's just basically debt money. And so, essentially, from there, fast forward 10 years or so, 1980, 1981, interest rates are at 20% in the U.S. There's large inflation. Volcker hikes rates up to 20% to curb the inflation, and debt loads are pretty low. And so from here, we have essentially over the last 40 years, from 1981 to 2021, we have the greatest secular asset boom of all time. But really what that means is the cost of capital got squashed from 20% to 0%. And this is in just, not real terms, just nominal terms. And so with every single, people know natively, like whether you study econ or not, like, oh, the business cycle, right? Like, there's recessions, there's upswings, there's downswings. Like, even if you don't have to be an expert to kind of understand this, intuitively. And so, every 7 or 8 years or so, there's a buildup in debt. There's kind of a speculative activity occurs. There's malinvestment, and the credit, this credit-based system would try to contract because it just wasn't sustainable. And what was the response globally? But if we're talking about the U.S. from the Fed, well, it was to cut rates to stimulate the economy. This is kind of the Keynesian school of thought, and to kind of reinflate everything, to keep the music playing. And so this especially picked up in kind of the really like the 2000s, but basically since Greenspan came in, there was like the great mediation. It was Greenspan just basically every time the market had a little bit of a tantrum, he'd come in and ease things. Well, that works until it doesn't. And basically in 2008, the zero lower bound was hit, meaning interest rates hit zero. Central banks that's their kind of floor, and they hit it, and they they didn't really have any firepower left for their main tool. So what did they start doing? And that is printing money, or they'll call it quantitative easing or open market operations, or a lot of these things. But essentially they lost their main policy tool, which was the cost of capital. It was their lever. When things get too hot, they could attempt to raise rates or lower rates. But that's all gone. And so from over the last decade, essentially, they tried to lift rates up, but basically rates have remained at zero. And so now we hit 2020, there's this huge economic crisis, lockdowns, all this, and rates were they started cutting rates beforehand in 2019. They started expanding the Fed balance sheet beforehand. And so now their main firepower is gone. So what do they have to do? They print, and this is like oversimplifying it, it's printing money, not really, but yes, they're printing money, and they print trillions and trillions and trillions of dollars. And a lot of people will be like, this is unprecedented, but in reality, we've seen these huge debt cycles before. And essentially it's just kind of the same playbook. Policymakers, they have only a couple tools: interest rate policy, quantitative easing, printing money. And the third is, because the first two policies concentrate wealth into the hands of the few, populism arises, people are angry and they're fed up with wealth inequality, and what comes next? It basically a populist, maybe not dictator, but president or leader comes into power, and the people demand to get payment. People demand for redistribution of wealth, and so that comes in the form of UBI or these unemployment benefits and a lot of this stuff. And so we're kind of seeing this playbook unfold in real time. And so, I think that the political incentive is obvious, right? No one's going to get elected on the platform of austerity. No one's going to say, we need to stop spending money. It's just not going to happen. And so the incentive is, all right, whoever is going to spend the most, I'm going to vote. Oh, you're going to give me free, quote unquote, free healthcare. You're going to give me free college. You're going to give me free anything. Great. I'm going to vote for you. And so we're going to see this game continue to go along, and all it means is the currency is going to continue to get debased. And so I think strategically, there will be some pro-Bitcoin, and eventually everyone will be pro-Bitcoin politicians, right? Because there is this ultra wealthy and increasingly wealthy class of people that are global that support this thing, and a lot of people are increasingly becoming single issue voters. I didn't vote, but I plan on voting next election on whoever is pro Bitcoin. And if there is none, then I won't vote. And so, yeah, I think how we see this play out is essentially they have no option except to print. And they're talking about the debt ceiling, and they're talking about all this stuff. It's all theater. They're going to print more money. They're going to expand the debt limit. They're going to continue to pass stimulus bills because they have to. That's just the nature of the game at this point. In a fiat-based, credit-based system, if they let things unwind, everything goes to zero, literally it goes to zero. And so, yeah, I think that's just, when people are kind of analyzing the political environment and everything just seems so chaotic right now, at the base of it all is that the money's broken, and you have a lot of people just trying to keep the game going.
You covered so much ground there. Yeah,
I rambled a little bit. So
no, it was great. No, it was great. I'm just wondering, just wondering how long. I want everybody that hears this to buy some Bitcoin, and just wondering how long until the currency just, the value just goes down so much. But none of us kind of really know. What are you? So now I'm curious about some of the stuff that you do and talk about all the time. What are you seeing on some of the Bitcoin data points? So sometimes you share about liquid supply and illiquid supply. For those people who haven't heard that before, can you talk about some of what you're seeing? And I think that's some of the stuff that you love really doing and looking at. You do a great job at it. at that. Can you talk about that and just share that with someone who's never heard that before?
Yeah, so one of the coolest parts about Bitcoin, we talked a little bit about Bitcoin's ledger, but with the way Bitcoin works, you basically have this transparent ledger or list of every Bitcoin in existence, when it was moved last, and it's not tied to any names, but it's pseudonymous. So you'll have basically addresses and you can see, oh, this address owns 10 Bitcoin, this address owns 1,000 Bitcoin, and you can see when it was last moved, and you can follow these capital flows. And so essentially you have the most transparent monetary network the world's ever seen. And so with that, you can do a lot of cool things. And so you can see what percent of the supply is held by long-term holders, or what percent of the supply moves on a daily basis, and a lot of things like that. And so what you see is essentially, and the classification of a liquid supply is, there's a little bit of nuance there, but anybody that wants to know, you can kind of check out Glassnode, or a lot of, I guess follow me on Twitter and we can cover that after. But about like 15 million Bitcoin out of the 18.8 million in circulation right now are classified as illiquid. Essentially, they're off the market. And so
because they haven't moved in how long? What's the time frame you're using for illiquid?
Illiquid supply. So essentially, illiquid supply is it's covering UTXOs, or like I guess the Bitcoin, whether it's had an output, so whether it's been spent. So essentially it's there's a lot of nuance there. Essentially,
yeah, I can tell you're way more advanced than me. Yeah, dumb it down for me. So like if I have a wallet that I'm holding and I'm holding some Bitcoin, if I'm just holding it, but let's say I move like 100 fiat dollars worth of Bitcoin out of my wallet, but that's all I've moved. Am I an illiquid holder or not?
Yeah, so there's different classifications for it, and essentially that would still be illiquid, but it's based on like a proportional basis. What I think is easier to explain is probably like long-term holders. So you essentially have, I believe off the top of my head, you have about 15 million Bitcoin that are held by long-term holders, and that time frame is 155 days. And so 155 days is the cutoff because essentially there's a statistical relationship with how long a Bitcoin has been held versus the probability that it's spent. And the longer it's held, the less likely it is to be spent in the future. And so this 155 days is like a statistically significant point in time. And so what you're seeing right now is like the long-term holder supply is at all-time highs. And so, despite the volatility, despite all this stuff, 155 days from now is essentially like, I think it's late April, backtracked. So, you have an all-time high amount of supply held by these strong hands, despite undergoing a, over 55-60% correction in between. And so, the volatility, like especially for people that have been in Bitcoin for not 1 year, but 2 years, 3 years, 4 years, 10 years, whatever it is, like it's nothing but a thing, right? Like volatility is nothing to me when I'm up 3,000%, right? I'm not talking about myself, but that's just kind of the dynamic here. And every single day, like I buy every day, it's not a lot, but just like I have an income and I save and I buy Bitcoin and I don't sell it. And there's a lot of people that do this on a much bigger scale than I do. And there's a lot of people that do it on a little bit of a smaller scale than I do. But the trend is more and more Bitcoin, the free float, this supply is decreasing every single day. And so a lot of the stuff that I look at, you can kind of quantify that and visualize it. And it's really interesting.
So when you're analyzing this data, are we entering a period where you're saying we've not seen this much long-time holders or liquid supply, or both? This is like a unique time where we haven't seen this kind of ratio from the long-term holders to the non-long-term holders before? Is this like a unique moment we're seeing?
Yeah, I would say so. I mean, in terms of like the on-chain trends, it's among the most bullish that I've seen. And so I think just what's happening with the price when you're saying, oh, you're super bullish, but the price was at 64,000 in April and now it's 41 or 42, whatever it is. What's the deal? And I think it's a couple things. Is that one, in April, a lot of it was basically derivatives led. So you had a lot of people, and derivatives meaning essentially you can take your Bitcoin and you can leverage up. I can take my 1 Bitcoin and I can get 10 Bitcoins worth of buying power. But the deal is, if it goes that the price runs down 10%, then I lose everything. And so you had a lot of people in the January, February, March, April timeframe continuously leveraging up their Bitcoin position with their Bitcoin. And so that was a pretty profitable bet until the market saw a downturn. And so when that happened, you saw a lot of people get wiped out. And so that was kind of why we saw such an aggressive pullback. And so now at 41,000, I think the supply demand dynamics are extremely bullish, but you just have less of a speculative kind of mania, which is healthy, which is good. And two, and you should, as a Bitcoin accumulator, you should celebrate that. And two, I think you just have a little bit of macro uncertainty. There's a lot of stuff happening with Evergrande, which is this huge real estate developer in China. There's just kind of, people are worried about, the knockoff effects, little bit of risk off in equity markets and stuff. And so, Bitcoin over the long term, there's this trend. Bitcoin is global money, and the world is slowly catching on. And so Bitcoin's monetizing, and the volatility and correlations and all that, it doesn't matter. We know what's going to happen here. But on the shorter time frame, just like say March of 2020, equities sell off 30% and Bitcoin sells off 70% and drops 50% in a day, right? That's all, that's because of the credit dynamics in the legacy world. That's because of, this huge debt bubble we're in. And so what's the response anytime something like that happens, though, is they have to blow it back up. They have to reinflate. And so these day-to-day things, or, week to week, month to month, if Bitcoin gets cut in half from here, like I'm a buyer, and I'm an ecstatic buyer. So I don't really worry about that. And when I'm looking at these trends on chain, I get more bullish every day.
Mm-hmm. Yeah, it's almost like as people get more and more educated on this, what money is, and if Bitcoin meets whatever their criteria of what money is, they decide to buy it. And then if they're buying it for those reasons, as like the purest form of money, they're holding it. If some people are just kind of speculating, sure. But once more and more people, or as more and more people just get educated on what money is, it feels like the accumulation is just going to continue. So it's going to be an interesting end to this year. I'm sure you follow Plan B stock to flow model. And I just look at that thing, and sometimes I'm like, is it really going to pop like this model says it's about to pop here? And then I see some of the things that you're putting out there on the, illiquid supply. I'm like, I think this thing's going to pop, but it's fascinating. Either way, I'm a happy buyer, like you're a happy buyer. So, it's just kind of like all upside. I think I just want to have a good form of money. I wanted to ask you about just the hash rate, because I think that's a really important thing. And you do a really great job of explaining that. I don't think most people understand kind of the importance, or, what it's all about. And I feel like I haven't given you much of a break. You've been talking the whole time, which has been fantastic. But can you just outline like your thoughts on the hash rate, how you would explain that to somebody, the importance of it?
Yeah. So hash rate is essentially, it's like the total computing power that's competing to mine Bitcoin. And so, I guess to simplify it or dumb it down, you can think of like how many excavators are going to mine gold in the, in the trenches. That's maybe a bad comparison, but essentially you have over the last decade, you've seen I don't even know off the top of my head, like a 1 trillion% increase in this hash power, in this basically race to mine blocks in this probabilistic manner every 10 minutes, right? And so blocks are spent, are on average coming in every 10 minutes, but there's this basically race to mine Bitcoin. And so to dumb it down a little bit, essentially like, guess a number between 1 and 100. And so, you're just going to guess one after the other, and eventually you'll hit. And then the race starts again and again. And if blocks are coming in, at a faster rate than every 10 minutes, then in about 2 weeks, or in 2016 blocks, there's going to be an adjustment, and it's going to become harder to mine Bitcoin. Or if blocks are coming in slower than every 10 minutes because the hash rate has decreased, then difficulty will adjust downwards. And so essentially what you have is over the trend over the long term is the price of Bitcoin has risen. Obviously, it's risen exponentially in a parabolic manner. And so there's an increasing economic incentive to go mine this thing, right? Because I can essentially sell electricity and computing power to the Bitcoin network and receive more value than I kind of put in. I can receive more output than the input. And so especially as the Bitcoin price increases in a parabolic manner, it becomes increasingly profitable. The incentive rises, and so you see more and more hash power essentially coming on to mine this thing. And what it does also is it basically secures the network. There's what's called a 51% attack. If there's 51% of the hash rate, which is an absolute massive amount of not only electricity, but computing power. I honestly don't think it's feasible, but if 51% of the network was essentially controlled by one entity, there is potential for malicious kind of actions to be taken. But that hasn't happened in the history of Bitcoin, but it has happened on, like, say, a lot of altcoins. So, there is this kind of the immutability of Bitcoin, the reason that it can't be corrupted, and that this ledger of truth is so incorruptible, is because there is basically the biggest computing network in the world that's securing it and that's supporting it. And it's just, it's just off economic incentives alone, which is the most beautiful thing, right? We talked about this Bitcoin is essentially, it connects the digital and physical realm. But so, what you have here is essentially now at a global scale, with just as much as a satellite signal, any sort of wasted energy, any sort of excess energy, which there is an absolute massive amount of, whether it's, methane on a gas field, what your buddy Greg's doing, or solar or hydro.
The province of Quebec here, I'm pretty sure, sells, you said you're from Vermont. I'm pretty sure the province of Quebec sells electricity to Maine or something, because they have so much on the grid that they need to get rid of it. So it's totally misunderstood. Yeah. And
like Bitcoin doesn't waste energy, it uses wasted energy, which a lot of people don't understand.
Don't get it. Yeah, it just kind of drives me batty. Okay, so we're a real estate brokerage. You've had some comments on real estate. Why? And I just want you to have at it. Just tell us the truth of what you think. You do not hold back. So, like, what we've been using real estate as a vehicle, like, you buy some rental properties, you get the benefit of, the low interest rates, the asset bubble. And there's obviously been a monetization effect of real estate. Real estate has become monetized. I don't know if you followed Canada, but definitely up here in Canada, real estate has become monetized. And to me, the way I'm thinking about it, like, it creates cash flow. It's a bit of a business. Bitcoin's this now form of money. So you should kind of be playing in both worlds. Is your thought at 20, you're 20, right? Is it 20? Yeah. 20. At 20, are you like, forget the real estate entirely, just go all out into Bitcoin? And I don't want you to hold back, because I know that we were in real estate, but I want to hear it straight from you. What's your thoughts?
Yeah, so at 20 years old, I'm definitely not going to allocate any capital to real estate, and there's a couple of reasons. One is that essentially, I think with real estate, maybe not in nominal terms, but in real terms, the lemon's been squeezed basically in its entirety. So with interest rates at 0%, and with real rates, basically, the interest rate divided or minus the inflation rate, real rates are, deep in the negative. Essentially, the price in real terms can't really rise that much more. And so if you bought real estate in 1990, well, as interest rates got squashed from 10% or whatever they were down to 0, you saw a huge increase in, like, the present value of that asset. And that's same with real estate, equities, bonds, any asset with a cash flow. As this kind of coupon gets squashed, the value of the asset increases. So that's one. And two is that I think the 2020s are going to be an interesting decade. And I think it's, I hope not, but I think it may or may not be chaotic in the political sense. And so I think with real estate, there's a lot of risks there in terms of political regimes, in terms taxes, of jurisdictions, taxes. And so, I prefer, as Michael Saylor might say, I prefer digital real estate. That is kind of,
didn't you say try to tax the 24 words? Was it 12 or 24 words in my head? Janet Yellen.
Yeah. Yeah. And so, with Bitcoin, I can take all of my wealth anywhere I want, anywhere in the world. And there's no counterparty risk there. There's no management. There's no tenant that's going to be squatting on my asset. And so, I honestly think over the next decade, real estate will continue to go up in dollar terms. I think that's a pretty good bet to me.
They might extend amortization schedules to get the population be able to buy it, push out the thing even further and further. Agreed.
But in Bitcoin terms, like, so I measured my college cost in Bitcoin terms. I did. And, volatility aside, I can handle volatility. I'm 20 years old, but I measure everything. I measured my college education. I measured the car I might want to buy. I measure the anything that I'm interested in buying, equities, right? Like, I think Amazon's a great company. I'm not going to buy Amazon for 40 million Bitcoin. Well, newsflash, there's only 21 million Bitcoin. So it's not a good investment. And so I think when you're looking at anything, if you're looking at, denominate it in Bitcoin and see how it performs over the next decade. And I think you might be vindicated.
Yeah. So, because the price of real estate's been coming down. If you hold some Bitcoin, the price of real estate's been coming down in Bitcoin, you've been kind of gaining. So, Yeah. So you're using it as
I
you're
think a
doing
good play
account.
may be if you do hold some real estate that you know fully own. I think a fantastic play would be
Oh, totally.
to
Yes.
refinance at 2%, 3%, 4% secured by your real estate, and to stack some stats.
Yeah.
Stack
Yeah.
some
We have a lot of
Satoshis.
clients in that particular exact situation. And I think more and
Nice.
more of them are having that thought, right? And that's a way they can balance out having some cash flow, pay for the existing, refinance, pull out some debt. And it kind of goes to Greg Foss's point, right? Like borrow at like 2%, put it into some Bitcoin. Fiat dollars are kind of melting in the whole bit. Dylan, man, you are articulate with this stuff. I wish I was as articulate as you are with this stuff. You're doing a great job, man. Just really keep doing what you're doing. I don't know how to support you best other than to promote you and share your Twitter handle and make sure people are following you. So can you please share a Twitter handle and anything else you want to share about yourself? Where can people kind of like track you down?
Yeah, so I mean, day to day, I hang out on Twitter. You can just find me at @LeClair_. What I do basically on a day-to-day basis, aside from hanging on Twitter and just kind of sharing my thoughts, is we produce the deep dive for Bitcoin Magazine, which is the financial markets product. And so if anyone wants to check that out, you can just find that on the Bitcoin Magazine website. And we actually put out a discount code, Rockstar. So it's $10 a month for 6 months. We put out 20 pieces of content a month. So, a lot of stuff just on chain, kind of what we were talking about briefly, derivatives and kind of the global macro environment. And so if you kind of want to get a little bit of a look at what's happening on like a quantitative sense, definitely, check that out.
Okay, cool. And so if I go to bitcoinmagazine.com, is the deep dive, like, is it pretty obvious where to click to kind of get to that?
Yeah, it's on the top right. I mean, I can send you a link, and I can also just hook you up with a sub. I mean, that's no problem.
Yeah, no, that's cool. And the discount code is Rockstar.
Rockstar.
And repeat, what is it? What is the discount code? Get everybody again?
So it gets you, it's just for $10 a month for 6 months.
For the first 6 months.
It's a pretty, yeah.
Yeah. Awesome. Okay. I didn't know you were going to do that. Totally. Thank you. We'll put so if you're listening to this while you're driving, at rockstarinnercircle.com/podcast on Dylan's podcast episode, in the show notes, we'll have the URL for that. We'll have the discount code for that. And Dylan, anything you're doing in the future, if you want to kind of share the message and, hit a different audience or whatever you're doing, I really want to support you in the best way possible and know that there's a bunch of fans here that are cheering for what you're doing. So keep doing what you're doing. You're really having,
I appreciate it.
Yeah, you're having a big impact. And listen, if you have Greg Foss kind of cheering your name on, you got to be careful. Wait, I forget. Have you met him in person yet?
Yeah, I met him in Miami.
Okay, you did. Okay, all right. Okay, yeah, he's a ball of energy. So Dylan, thank you so much. Really, really appreciate this. Appreciate you taking the time and appreciate you doing all the work that you're doing. Thank you.
I'll catch you later.
Hey, thanks for tuning in. You can find every new episode of the Your Life, Your Terms show on all the major streaming platforms. So Spotify, iTunes, Google Play. And if you'd like to get free copies of some of the books that we've put together, like these right here, or some of the reports that we've put together, like these right here, you can find all of those at www.rockstarinnercircle.com. That's www.rockstarinnercircle.com. That's it for now. Until next time, your life, your terms.